Hello and welcome to all our viewers. This is WION Wallet. I'm Sumit Chaturvedi. Let's see what is making headlines in the world of business this morning. Indian IT industry body NASSCOM steps up its lobbying with American lawmakers amid large layoffs and visa curbs in the US. OPEC officials gather in Vienna to prepare for next week's ministerial meeting, focus on rising shale oil production in the US. The UK threatens to quit talks on leaving European Union unless the bloc drops its demands for a divorce payment as high as 100 billion euros. And internet on flights could soon be a reality in India. Reports say government is likely to give its nod by August end. Now straight to our top story, where OPEC officials have gathered in Vienna to prepare for next week's ministerial meeting, kept their focus on rising US shale oil production, which has been diluting the price impact of their production cuts. Now, national representatives from the Organization of Petroleum Exporting Countries, or OPEC, and officials from several non-members heard a presentation on the outlook for US industry. Now, officials at the meeting were relieved that two outside consultants had estimates for growth in average US crude output of 450,000 to 5 lakh barrels a day this year, lower than 562,000 barrels a day forecast from OPEC's own analyst. Well, the emphasis on US production underscores the dilemma for OPEC and its allies as they consider whether to extend their cuts beyond June. The producers, who gather account for about half of the world's oil supply, they have been the initial price boost from their historic agreement fade as shale companies deployed more rigs and raised the country's output to the highest since 2015. The UK will quit talks on leaving the European Union unless the bloc drops its demand for a divorce payment as high as 100 billion euros. This according to Brexit Secretary David Davis. Britain's negotiations would otherwise be plunged into chaos, and even a £1 billion settlement would be a lot of money. Davis said in an interview that the size of Britain's exit bill, which types of negotiations can begin before it has been agreed, has been a source of debate for weeks. Now, European Commission President Jean-Claude Juncker said UK will have to pay about £50 billion, while Luxembourg's Prime Minister has signed a figure between 40 billion euros and 60 billion euros. Prime Minister Theresa May of UK's government said it will meet its commitment to the EU, but has questioned how Brussels officials reached their preliminary estimates. And from UK to Canada, where home price growth in Toronto has slowed in the first 2 weeks of May and sales fell 16% from last year, signaling that a new tax on foreign buyers and funding crisis at mortgage lender Home Capital Group may be cooling in the market in Canada's biggest city. The average selling price for all home types was around $658,000 through May 14, up 17% from the same period a year earlier and down 3.3% from the full month of April. Now, housing prices have jumped 25% in April and 33% in March from the year earlier. Period slower demand is hitting as more homeowners opt to sell. New listings in the first half of May climbed 47% from last year to 1,262, and unit sales fell 5,000 units. Now, China's plan for a maritime Silk Road to Europe is helping channel funds to Southeast Asia for roads, railways and ports. But amid the deal bonanza, one country, Singapore, risks missing out all this. Well, despite strong historical and cultural ties to China, the tiny state of Singapore has found itself in Beijing's crosshairs, in part for its stance over territorial disputes in the South China Sea. As other Southeast Asian leaders lined up to meet President Xi Jinping at a summit in Beijing this week for his Belt and Road Initiative, Singapore was represented by National Development Minister Lawrence Wong. China views Singapore as being less supportive of Xi's plan because, unlike other countries that announced their leaders would attend without requiring a formal invitation, Singapore sought an invite on obor. Blackstone Group, the world's biggest private equity manager, is eyeing more than $100 billion in infrastructure investments with a new strategy anchored by Saudi Arabia's Public Investment Fund. Saudi Arabia's fund has agreed to commit $20 billion to the pool, and Blackstone plans to raise the same amount from other investors as well. The agreement between Blackstone and PIF, which is Public Investment Fund, is a non-binding Memorandum of Understanding or MOU, and the organizations are continuing to negotiate terms. The partnership comes as top executives, including Blackstone Chief Executive Officer Steve Schwarzman and KKR and company co-CEO Henry Kravis, descend on Riyadh for the inaugural Saudi-US CEO Forum, a weekend of deal-making. The meetings, which have already yielded billions of dollars in deals between companies including oil giant Saudi Aramco and General Electric, they are taking place as US President Donald Trump is visiting Saudi Arabia. The infrastructure investment has gained momentum over the last few years, and US is a big partner as far as Saudi Arabia is concerned. Now, news from the auto space, and that too from China, where Audi and its dealers in China have reached an agreement on how cars produced with SAIC of China will be sold in the country. The deal, announced in a press statement, ends months of tension after Audi parent Volkswagen set out plans in November to produce cars with SAIC. Previously, the German company had made Audis in China exclusively with China Ford Group. Leaders expressed concern that arrangement with Shanghai-based SAIC could have added more distributors and depressed their profits. Under the accord between Audi and dealers, any SAIC-produced cars will be distributed through the existing sales network. A new sales steering structure will be defined to handle distribution from the two partners. Details of the pact were released earlier in the day by the Dealers Association, which stated that Audi cars manufactured by a third party would not be sold in China until January 22. But compensation would also be given to dealers for losses in 2016. Now, sales in China, Audi's largest market, plunged after dispute broke out, declining 35% in January from a year earlier. News from India, we're facing rough weather amid large-scale layoffs and visa curbs in the US. Indian IT industry body NASSCOM has stepped up its lobbying with the American lawmakers significantly, with an over one-third increase in money spent on such activities. Now, according to latest lobbying disclosure reports filed with US Senate, the National Association of Software and Services Companies, or NASSCOM, paid a total amount of $150,000 to its two registered lobbyists in the first quarter of 2017. This marks a significant rise from around $100,000 paid to the two lobbyists in the previous quarter ended December 2016. The amount was same for each of 4 quarters of 2016. Now, among the two lobbyists, the Lande Group was paid $50,000 in January-March quarter of 2017, the same as money paid in each of the 4 quarters of 2016. However, the other lobbyist, Wexler and Walker, a unit of Hill & Knowledge, was paid $100,000 in the first quarter of 2017, as against $60,000 in the previous 3 months and in many of the previous quarter. Well, as per the lobbying disclosure report, the specific lobbying issues undertaken by this lobbyist included those linked to immigration. The general issues including tax and trade matters too. Now, the government of India has initiated the spade work for shifting the financial year to January from April to align with the agriculture production cycle. Prime Minister Narendra Modi had backed the idea of January-December financial year last month while addressing chief ministers at the Governing Council of Niti Aayog. Preliminary work has started and it will gather momentum as the year progresses. The government had last year set up a high-level committee to study the feasibility of shifting financial year to January 1 from the current practice of starting it from April 1st. The committee submitted its report in December, reasoning for the change and its effect on the different agriculture crop periods and its impact on businesses, the taxation system and procedures, statistics and data collection. PM Modi had said that in a country where agriculture income is exceedingly important, budgets should be prepared immediately after the receipt of agriculture incomes for the year. Madhya Pradesh in India became the first state to change the budget cycle to January-December from the existing April-March earlier this year. The government advanced budget presentation by a month to February 1st with a view to complementing the legislative approval. And now good news for Indian flyers, where internet on flights could soon be a reality in India. As reports say, government is likely to give its nod by August end this year. According to senior officials, Civil Aviation Ministry is awaiting clearance from Department of Telecommunications. In-flight internet is currently banned in India on security grounds. However, about 70 airlines across the world offer net services on board. The flight letting passengers email, live stream, use social media, download movies and even make calls. Indian carriers like Jet Airways and SpiceJet are slated to take deliveries of the Wi-Fi fitted Boeing 737 MAX by mid-2018. Currently, they have to switch off Wi-Fi in the Indian airspace on security grounds. So this is going to be a very good news for flyers, those who want to use internet while on air. Well, this practice is already prevalent in across 70 airlines across the world, including Emirates and Etihad. Now, 3 Indian companies, Gitanjali Gems, Titan and PC Jewelers, have been named in the list of top 50 luxury goods firms globally that was topped by Louis Vuitton. Gitanjali Gems was placed in 30th rank, followed by Titan Company, 31st, and PC Jeweler, 44th in the 4th annual Job Global Powers of Luxury Goods report. Among the top companies globally, 3 were luxury conglomerates participating in multiple sectors of the luxury good market. Overall, the list has been topped by Louis Vuitton. The Indian market is of now global concern, of increasing concern to all luxury market and their producers across the globe. One of India's luxury passenger trains, Tejas, will be flagged off from Goa today. Railway Minister of India, Suresh Prabhu, will give green signal to state-of-the-art train. The Tejas Express will offer on-board facilities such as LCD screens, Wi-Fi, CCTV, cameras, redesigned seats, bigger luggage racks and automatic doors to its passengers. It is also capable of running at speeds to the tune of 200 kilometers per hour. The train will also have on-board facilities like tea and coffee vending machines, snack tablets and magazines besides entertainment and local cuisine. But traveller will have to shell out more than 20% in base fare compared to Shatabdi Express. The luxurious train will also run on Delhi, Chandigarh and Surat, Mumbai routes. With this, it's time for a short break on WION Wallet. After the break, we will continue with the coverage of markets. Stay tuned to WION. Welcome back to WION Wallet after the break. Now straight to our market segment, where Indian markets have once again opened in green. We can see Sensex up by around 191 points, which is again a big jump from the previous days. Also, Nifty is up by around 45 points, which is again a gain from the previous close. Well, clearly, Indian markets are still on a, we can say that, bull run. Well, they are buoyed by many positives that are happening for the Indian markets, including the monsoon arrival on time, the GST schedule, which is also going to come by July, and a lot of other positive factors that are currently working in favor of Indian markets. If you want to tell viewers, Indian markets have opened in green. Sensex is up by 191 points, while Nifty is up by 45 points. In other Asian markets, Nikkei is up by 88 points. Asian markets overall are in green. They have shrugged off concerns over North Korea's missile test. So clearly there is no concern as far as North Korea's missile test is there. We are joined by our guest for today, Mr. Ashish Kelkar from Pune. Well, good morning, Mr. Kelkar. First of all, we would like to know from your side, how do you see trade happening today?
Good morning. If we look at the Nifty opened at a positive bias, but now it is correcting a little bit. But I believe that for today's trade, Nifty would take a very good support at 9440. So till the time Nifty is above 9440, I am expecting a bullish momentum to continue for the rest of the day. If we talk about medium-term trend, overall market trend is up, but the very important trend decider level would be 9360. If the market goes below 9360, then there will be a correction which could take the markets to around 9,200 odd levels as well. But for today's trade, this bullish momentum would continue is what the charts are suggesting.
Mr. Kelkar, what should be trading strategy for the day?
If someone wants to trade in index, I would suggest not to trade in index. Stock specific approach should be accepted. So if we talk about stock specific actions, definitely there are some sectors or stocks where the actions will be seen. Most probably, if we concentrate on FMCG stock today, due to GST, positive bias is on FMCG. If we look at FMCG stocks, they are making or clocking higher top, higher bottom consistently for the last 1.5 months. So this momentum will continue. So stocks like Marico, ITC, these are the stocks which you should keep on radar.
Okay, and what about this sector-specific stocks? Any stocks that are on your radar which you will recommend to our viewers?
As mentioned, first sector that I would concentrate upon is FMCG, Marico and ITC. These two stocks I would recommend. Another sectors which I am keeping an eye on is reality. In reality and infra, there are few stocks which will move up like anything, and they would generate a return of around 40 to 45% in the next 6 months. The stocks like A2Z Infra, ARSS Infra, these two stocks, they are small cap stocks, but they have got a tremendous potential to deliver a return of around 40%, 45% in the next 5 to 6 months. Another sector which I am not bullish much, and that is IT. IT is not making very good, it is not delivering a good performance basically, but there is one stock which is outperforming this sector, and that stock name is Trigen Technologies. Now Trigen Technologies currently is trading at around 160 odd levels, and I am expecting the stock to reach up to 250 levels in the next 1 year. So this is a third stock that I would recommend.
And Mr. Kelkar, a slew of insurance IPOs are in works currently. Would you recommend our viewers to put money in insurance IPOs which would be coming during the year?
As a technical analyst, I don't have any coverage on the IPOs, but if I look at overall markets, the markets are not, or the particular sector, they are not delivering a handsome return if I compare with the rest of the sectors. So what I recommend is let these stocks get listed on the exchanges, let them form a proper price pattern on the chart, and then if at all there is a positive momentum with very good headroom for the profits, then only one should invest in this kind of stocks.
So as far as GST is concerned, clearly that is going to be a reality very soon in India. What are your recommendations for the stocks that are clearly GST linked?
Two stocks again. The first one is Marico, and the second one is from the logistic. If we look at the stock like Sickle Logistics, it was making higher tops and higher bottoms. Now it is consolidating. So this is a good price to buy. The potential of this stock, currently the stock is at around 250 odd levels. The stock has potential to test 300 odd levels in the next 1.5 months. So this would be another stock that I would keep in mind.
And some stocks which are linked to monsoon, which is again coming as per as the schedule. So what will your recommendation be there?
The stocks, agro stocks. One stock which I would recommend is Rallis. Rallis India it is from the agro field. So this stock was making higher top and higher bottom. It is in the making of ascending triangle pattern formation, which has a bullish implication. So this stock is also a good stock, and currently it is trading at the support level. So it is very good buy because the risk to reward ratio is also in our favor. So definitely it can be bought for the target of 270.
And shifting the focus towards global markets, Mr. Kelkar, now Asian markets have clearly shrugged off the fears of any North Korea missile test. What is happening over there? What likelihood do you see in the coming few days?
If we look at the Asian markets, definitely all the Asian markets, let's take an example of say Nikkei. If we look at Nikkei chart it was consistently making higher tops and higher bottoms. It was in an uptrend. But if we look at the chart from the month of March 2017 till today, there was a sharp decline from a level of 19,700 to a level of 18,100. And again, there is a V-shaped recovery. After that kind of recovery, a consolidation is expected, and that is what is happening on the chart as well. So if I talk about all the Nikkei, Hang Seng, all these indices, they are entering into two types of correction. One is a time correction, another is a price correction. So price correction, instead of price correction, time correction is happening on Asian market charts. So yes, definitely they are gathering the strength to go up further. A little bit patience is required for the indices to give a breakout. Once the breakout happens on the chart, definitely these Asian markets would be they are on the verge of next bull run.
And also, any correction do you see in the coming few days as far as Indian markets are concerned?
Yes, definitely a very good question. If I would be talking on Nifty specifically, if I look at the chart of Nifty, 9530 is a level which one should look at. And the second level on the lower side is 9360. Now the Indian markets or the Nifty particularly is trading in this particular range. On the higher side 9530, on the lower side 9360. Till the time we are in this band, I am expecting a consolidation and indecisive moves. Either of these level is taken off, then there will be a next trend decider. These are trend decider levels. So the correction will happen only if the Nifty closes below 9360. And in that case, the Nifty would test to around 9,200 odd levels.
And if that happens, what would be your favorite sector or stocks be?
Definitely, a very good question. If I look at the correction, if correction happens, then definitely I will jump on infra stocks and the FMCG stocks, logistics stocks, and another housing stocks, housing companies, because infrastructure will boost up the housing sector also. So these are the four sectors which I will look at.
All right, thank you, Mr. Kelkar, for talking to us. So as we talk today, Indian markets today opened in green. Overall, all Asian markets are in green as they have shrugged off the fears as far as any North Korean missile testing is concerned. Indian markets are in green because all factors are positive here. With this, it is time to wrap this edition of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.